topics and opinions expressed in the following show are solely those of the host and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Good afternoon, everybody. It is Donna Campbell with Real Estate Dreams and Beyond. Welcome to the show. We are on every Monday at 3 o'clock. You can tune in to us on W4CY and follow up with our broadcast on Apple Podcast, iHeartRadio, YouTube, and many more outlets. Thank you again for joining us today. Real Estate Dreams and Beyond is just that. And today I have a very special guest with me, Frank Christiano. Hi, Frank.
Donna, how are we doing?
Great. How are you?
I'm good. I am good. Nice to see you.
It's great to see you. Thank you so much for joining me today. I'm so excited to let people know about your move that you've made and the new products that you have to offer in the mortgage business. So let's just jump into the program and tell me, Frank, about you and how you got started in this business.
Of course. Well, thank you so much. First and foremost, I really appreciate the opportunity to be on this show. It's fantastic. And so I am a loan originator. I'm with a company called Premier Lending Corp. And we are a direct wholesale mortgage broker. And I was with Cross Country Mortgage for about 6 years. Great company. And I recently, about a month ago, decided to make the switch. And now I'm with Premier Lending, and we're loving it. I brought my partner, Alex, with me. I brought my transaction coordinator, Anthony, and we've been here for about a month. And so far, we're really enjoying it.
And, okay, I know the secret to why you moved.
Did I lose you?
No, am I there? Can you hear me?
Donna?
Hello? Can you hear me? Can you hear me?
Having a little bit of trouble hearing you. I'm not sure if that's me or you.
How about now? No?
There we go. Much better. Yeah, there we go. There you are.
Oh, good. That's going to be bad.
Much better.
Listen, something like that happens, just go with it. Okay, Frank? We'll hope for the best.
You got it.
You made a move to a wholesale mortgage company, correct?
Yes, I did. So I was in retail lending, and I've been in the mortgage industry for about 20 years. I got in the industry back in 2004. I was a student over at FAU, and I was living at home at the time. And my parents were like, look, you got to get a part-time job. I mean, it's nice that you're going to school and all, but you're almost done. You're 23. And I think it's time that you go and get a real part-time job, not like some, just hourly job that you were just, using for spending money for school. And I remember I looked in the newspaper. This is going back 20 years. So we actually had newspapers back then. And I went to the classified section and I found a company in Boca and I called them up and they said, sure, come on in. And I come in and they hired me on the spot. And I remember walking in and it was this old building. There was really no one there. There was the owner of the company, his partner, and maybe one other person. And they hired me on the spot. I'm like, okay, well, that's great. I mean, what am I doing? I don't even know what I'm doing here. And they handed me a stack of paper leads. I don't know if you remember paper leads, where it had the name, the phone number, and email address of the person. And you were just dialing all day. No salary, no hourly pay, no draw, zero. So you could go weeks, if not months, without making any money, which unfortunately I did. And I remember just sitting there every day, just pounding the phone day in and day out and really just cutting my teeth the best way that you can, right? And just kind of learning as you go, right? And so I was in that side of the industry for years. And then in 2008, the market kind of collapsed, as we all know. And We were like, well, what do we do now? Rates went from 5s and 6s up to 8s, and there was a lot of foreclosures and short sales. And then everybody was, well, you got to jump into loan modifications and short sales. And everybody kind of migrated to that side of the industry, which was more of like not really lending, more like just kind of restructuring buyers or owners who were behind on their mortgage. And I did that for maybe a couple of months, and it wasn't my thing. Really didn't enjoy that at all, and got back into the lending world a couple of months later, and took a job with a company called Guaranteed Rate, great company right here in Boca Raton, and was there for about 3 years. And then the retail banks were heavily recruiting from companies like Guaranteed Rate, and I ended up I had a family member that worked at Bank of America, and they recruited me to go work there. Stayed there for about 3 years. Did not really do too well there, to be quite honest with you. It wasn't a whole lot of fun. And then I went over to Wells, where I stayed there for about maybe eight or 9 months. And then I joined Finance of America, who my brother-in-law, Matt Weaver, was, he had brought me over there, and we had joined Finance of America. I was there for a couple of years, and then we moved over to Cross Country, and I was there for 6 years, which is a long time to be with the same company. And just recently moved over to Premier Lending. So I've been here for about a month at this point. And the big difference between the two companies, right, is Cross Country Mortgage is fantastic. They're quick, they're efficient, they're going to close your loan. But I feel like with being on the wholesale side, I have the ability to, number one, have access to more investors, which means more loan products, different products that other lenders, in my opinion, don't have access to. We have the same service levels in terms of appraisal being able to be done in 4 or 5 days, 10-day closings, 24-hour loan approvals, pre-approvals on the weekends. Really everything I was able to offer at Cross Country, but now having access to more investors, having lower rates, having considerably lower fees, and in the market where we're in, where rates are rising, the buyer does have a lot of control in the transaction. So they want to know that, hey, if I'm going to get referred, if you're going to refer me, meaning myself, they want to know that I have the ability and I have the platform to be able to not only close quick and get them quick approvals, but get me the best rate, get me the lowest cost. So that was a couple of the driving forces behind making the move.
So give me an example of a product, Frank, that you would now have in your wheelhouse that you might not have had before you made the move.
Sure. And in fact, we just had one last week where we had a restaurant owner. They have a business. They claim only X amount of income because they don't want to pay taxes. Who can blame them, right? So they're showing a substantially lower amount on their tax returns than they actually make, and their only option was a bank statement loan. So we have a product where we can use 12 months of the bank statements. We simply take all the deposits for the last 12 months, total it up, divide that by 12 months, and we're able to use that as income. Now you would probably say, well, what's the rate? Somewhere in the 11s or 12s, and our rate was in the low 8s.
Oh,
so
wow.
Just to put that into perspective, right? If you went on Google and typed in mortgage rates today, they're going to pop up with something in the high 7s, maybe even low 8s. We have a bank statement loan where we take 12 months of the consumer's bank statement. They have to be self-employed, and we're using the bank statements as their way of verifying income. So if you got a restaurant owner that makes $60,000 a year on paper, but they really make probably closer to $400,000 or $500,000 because they don't want to claim all their income, we have a product to where we can take the bank statements, take the 12 months deposits, and use that as income. Also, we have a no-doc loan, a true no-doc, which anyone who's been in the business a while knows that a true no-doc is essentially hard money without hard money rates and cost. So when I say no-doc, no income, no assets, a true no-doc loan.
Wow. That's
so
amazing.
just things that I didn't really have access to. And again, Cross Country is fantastic, but just different loan products and things that I didn't have access to up until a couple of weeks ago.
Well, I have done, several hard money loans, in my career. So I'm excited, not me myself, but for my clients. I'm
Okay.
excited that you have that available to you. And then on a no dog loan, is this when you're investing in a second home or a first home?
Primary home, but I mean, we do have second home. We've got investment property. We have a loan, and we had this at Cross Country as well, where it's called DSCR. It's basically a debt service loan where, let's say, for example, you're buying an investment, or your client is buying an investment property, and they don't have the income to qualify. We just simply qualify the buyer based on the rental income. We're qualifying the property, not the buyer. So, for example, let's say that rent payment is, or excuse me, that mortgage payment is $4,500 a month. As long as we can show that the rent will offset whatever the mortgage payment is, that's all the buyer needs to qualify. So think about that for a second. Your mortgage payment's $4,500. We do a rent schedule, and the rent schedule comes in at $4,700. We're good. Now, if it comes in a little light, all you're simply doing is adjusting the loan amount and increasing the down payment to get it to a point where it just washes out with the rental payments. Does that make sense?
Oh, yes, absolutely. Absolutely.
So just really exciting stuff. And we're in a market where rates are going up. I mean, they've been going up now. This is going on close to, what month are we in? August. This is going on 18 months at this point, right? Where we started to see early 22, we started to see high threes, low fours, and then probably like May, June of 22, there was a big jump in about a 2 or 3 month period where we
Yes.
saw low mid fives right up to 7. And there wasn't even it was like the rug was pulled out from under you, right? So
Yeah,
in a high
skipped
rate
over
environment,
fours, I think.
yeah. So in a high rate environment, the buyer wants to know, hey, I need options, right? I need to know what can we do if we can't qualify for a traditional loan product. Is there something that we can qualify for that's a more of a non-traditional, outside the box type product? And we have that.
That is, I'm very excited about that. Do you, how do you feel about the market right now?
So I think it's still, as far as prices go, I don't think, I can confidently say this, I don't think prices will drop as much as people had hoped. It's very
Agreed.
simple, right? If you have a market where rates are rising, well, that means so I saw a stat the other day. I'm going to back it up a second. I saw a stat. I think 64% of owners have a rate below 4%. And out of the 64, 37% don't have a mortgage. They own free and clear. So think about that for a second. If you've got 100 homeowners, 64% of them are below 4, and 37% have no mortgage. So for the most part, those people probably aren't going anywhere. Would you agree?
Agree.
Unless, God forbid, there's a passing in the family, a divorce situation, a relocating for a job, maybe downsizing. But I think out of that 65%, I don't think a big number of those people are going to be trading up anytime soon. That's my honest opinion. Now, the remaining 35%, I think I saw a stat, 84% are below 5%. Well, right now rates are in the 7s. That's a big discrepancy. So a lot of those people aren't going to be going to it. So what I'm getting at is, you're not going to see a lot of people listing their house unless they truly have to move, which means job relocation, God forbid, a passing or something like that, or they just want to downsize and go to something really, really small. So the reason I share that is because you're not going to see a lot of inventory. So if I'm looking at a house in Delray Beach, right, and I really, really like that house, and it's the one house in the neighborhood that's going to hit the market, well, the probability is there's going to be other people such as myself who want that same house. So what does that do for prices? Raises the price, because now we've got a multiple offer scenario. Now when rates drop, there's going to be a lot more inventory, because now people are like, okay, great, now I can sell and I can buy that bigger house, because I don't mind going from 3.5% to 5 or 5.5. It's not that big of a jump in price, in payment. But use someone like myself. If I were to move today, great, I would get top dollar for my house. But I would go from the rate I have today to something in the high sixes, low sevens. My payment would almost triple. So
Oh,
there's a lot
that's
of people
scary
out
when
there.
you say that, right? Triple.
Correct. So
Gosh.
what I'm saying is, I don't think you're going to see prices plummet the way people think. So to wait for the market to bottom out, it would only bottom out if there were more inventory than there were buyers. And there's clearly that's not the case, not even close.
I was looking at some statistics last week in regards to market data. And one of the things that I noted was, they say that when you have the inventory ratio of 5, that you have an even playing field for buyer and seller. It's the buyer's market and the seller's market, and there's no advantage to either. But right now we're still at the 3, meaning it's still in the seller's court. But like you said, listings have actually went down since last year. Prices continually grow. Statistics for the month of July will be out from the Florida Realtors Association, I think within the next day or two. And I'll be happy to update everyone on those numbers. But in Palm Beach County, what we've seen from May until June was an average rate of 622 for a single family home, climbed to 625 in June, where I thought for sure it was gonna, be a little sluggish, but
Yep.
prices remain very, very strong.
Very strong. And I don't see that changing. I just don't. I'm not, you're the real estate specialist. I know more than numbers, right?
Yes.
So we're in a similar field, but you know that side of it better than I do. I can only use what I see in my own, where I live geographically, right? And what I see is, I live in a neighborhood where there's maybe about 150 homes, and to sell where we are, to get maybe an extra bedroom or or maybe a swimming pool, you have to make a pretty sizable jump in price.
Yes.
So you don't see a lot of people listing their house right now. The only sales that we've seen are the people that are relocating, or they're going to a condo. So we're thankfully, it's been good for us because our prices haven't really dipped. I mean, in fact, if anything, they've kind of steadily gone up over the last couple of months, which is pretty interesting.
Speaking of condos, we've had a lot of things happen in that particular industry. Do you have a niche product for that market?
We do. So we do a lot of condo financing. What I will say with condos, I'm noticing, I don't know if you're noticing this too, a lot of these condo buildings now are not carrying hurricane insurance. And the insurance they're carrying does not meet the minimum deductible per Fannie Mae guidelines. We're seeing a lot of 7.5% deductibles, and Fannie Mae's max is 5%. I find that interesting because that could be a problem for, number one, for the buyer, number two, for resale value, of course. So yes, we do have products for that, but the main thing to keep in mind with condo financing is, number one, it's got to pass a full Fannie Mae review or a limited review in order for the buyer to qualify. It has nothing to do with the buyer themselves, right? So the buyer could have great credit, they could have a lot of money, they could be a A+ buyer, but if that building does not pass either a Fannie Mae full review or limited, or it has hurricane insurance that doesn't meet the Fannie Mae requirements, which now I'm noticing a lot of them are starting to have this issue, that potentially could be a challenge for buyers. So if you do have buyers that are looking specifically for condos, very important we get the insurance up front to see if there's any issue with the insurance, because now I'm starting to see a lot of these condo buildings either A, won't carry the insurance, or B, only carry they carry the 7.5% deductible, and Fannie Mae's max is 5%. So that's really interesting that I'm seeing that.
Yeah, this really doesn't have anything to do with condos, but I had a client from last year that I sold in July call me yesterday, and she was like, I just want to know why my mortgage went up $350
a month.
She said her mortgage went up by $350.
$350 a month or $350 a year?
$350 a month.
Oh wow, okay.
And I said, well, you have a fixed interest rate, so it can only be taxes or insurance, right?
Correct. Yep.
And come to find out, yes, her insurance did go up,
Yep.
and her homestead had not kicked in yet. So she's not feeling that. I was explaining to her that what seems to happen anyway, I'm not an expert, but what seems to happen is you don't qualify for your homestead for 1 year, right? After owning. And
Correct.
then it takes a little bit of time. Does that not kick in into the following years? So, like if your 1 year anniversary is in August, Frank, are you not feeling the effects of that until January?
For the following year, correct. So the
Yeah.
other thing too to keep in mind is that with the insurance is a big one right now. I'm noticing that a lot of these carriers are now pulling out of the market because the apparently we're the number one. We are the number one state in the country for fraudulent insurance claims. Imagine that.
No, I believe that.
So the insurance world is getting very tricky. I remember years ago, if somebody called me and said, "Hey, I'm looking to make an offer on a house. Can we run some numbers? I'd like to get an idea what the payment looks like." And let's just use an example: $300,000. We would quote them anywhere between 1,800 and 2,200, 2,400 a year for their insurance. Now, I have not seen a premium. I don't care unless it's a townhouse on a single family home that's been less than 5,000 a year, and they're just gradually going up. Now, citizens will typically have a lower premium available, but remember, I told my one buyer yesterday, don't compare don't compare the price. Make sure you look at the coverage. Make sure it's similar, right? You want to compare apples and apples because while one premium may be $1,500 cheaper for a year, that coverage may not be it may not be equivalent to what the other company is giving you. Very important. So just something to keep in mind with that. And yes, as far as that young lady or that couple that the payment went up, very common because what happens is if they're escrowing taxes and insurance, when that following year rolls around and there's either an increase in their insurance premium or the tax bill, the property's reassessed, and let's say they don't have homestead exemption, there could be quite a bit of a jump in taxes and insurance.
Yeah, it's you know, most first time buyers, I think, believe that, it's really just about qualifying for the mortgage. But here, I mean, you really have to check out insurance in a big, big way, right? Because, I mean, it could make or break the deal.
Oh, without a doubt. I mean, we've had scenarios where the buyer would get pre-approved, right? And let's say the price was $400,000. They go out, they make an offer for 400, they get under contract. We get the inspection and the wind mitigation. They shop it to different insurance companies. Premium comes in, let's say, $2,000 higher than we initially anticipated. No fault of ours, of course, because we don't know what that insurance premium is going to be until they get a quote from an insurance company. And then we get that premium back. The debt ratio is too high and they don't qualify. And they're like, "Well, what do you mean? You told me I was pre-approved for 400." Well, we were basing the insurance on 350 or 400 a month. The insurance came back at 550 or 600 a month. So now your ratio goes from 47 or 48. Now it's over 50, and now you don't qualify unless you put more money down. So very important. The insurance is a big one. Taxes, I don't think so much. I know there's this big misconception that it's a flat 2% of the purchase price. I've been doing this a while. I've never seen it actually. Have you? Honestly,
No.
I had one guy call me today. He said, we're thinking about canceling our search because we went to the Palm Beach County property appraiser site and we ran the numbers and my tax bill is going to be $16,000. I said, "Well, what price did you put in there?" He put 800,000. I said, "Yes, I mean, could it be if you don't file a homestead? It could." I said the probability is it'll fall around 11 or 12,000 at the most. Not to mention he was porting his tax bill from another property. So taxes and insurance definitely play a tremendous role in not only buyer qualifications, but the buyer may not be comfortable with that payment. A lot of times the buyer qualifies for more than they're actually comfortable paying. So definitely something to keep in mind.
Also, when you're getting insurance, this I didn't know this when I first started real estate, but if you're getting insurance, and let's just say that you live on 2 acres, I'm just making this up, right?
Okay.
And you have a house. And for this 2 acres in this house, I'm going to make up another number. You paid $700,000, right?
Okay.
Most people believe that you need $700,000 worth of insurance to go along with that. But actually, one of the ways to save is just to focus on the home and not the land, right?
Yes. Yes. Yep.
And I was also surprised that the mortgage lending can't really dictate that either. You know, if you say, well, I'm going to have coverage of 620,000, I'm just making something up again, then that should be okay with a mortgage lender. Am I understanding that correctly?
So regarding insurance, I have to be honest. I don't really dive too much into the insurance side of it. I let the team handle that. But I will say that what I would really suggest someone do if they are in the market to purchase or they're under contract, you do want to really get a quote from at least 2 or 3 different companies, and again, really just put them side by side. I almost learned the hard way because I got a substantially lower quote from a company, and then the gentleman I was speaking to, I said, "Hey, look, I said I'd love to work with this, and unfortunately, your quote's like $1,600 higher than this other company." He said, "Okay, well, you mind if I take a look at it and just make sure? I just want to make sure it's sufficient coverage, and if it is, by all means, I'd rather you work with them. I mean, if you could save some money, that's great." So I sent him the policy, puts them side by side, and he calls me up and he says, "Frank, look, I just want to go through this with you line by line, so you better understand how different these policies are, right? Like one of them, I don't know exactly what the amount was, only covered up to like, I'm using a fake number, $10,000 in water damage. And I think it was 10,000. And he said, well, you live in South Florida. You're 2 miles from A1A west. He said, most of the damage, most of the claims that are filed in the state of Florida are from water damage. So I didn't even think of that, right? All I looked at was I got one policy, I got the other policy. I scroll down, I look at the cost. This one's 5,000, this one's 6,600. Give me the one for 5,000, right? And that's just not the way to do it.
Yeah, absolutely. And
I'm pausing for 1 second. I'm just grabbing my charger. 1 second. I'm sorry. my battery.
Back to it's not just about the rate, and that deals with mortgages as well. Some people are like, I'm going to shop the rate. I'm going to shop the rate. I'm going to shop the rate. But that can actually backfire on you, right? Having your credit pulled so many times.
Yes. So what I would say with that is I would encourage someone to shop rate, right? At the end of the day, the buyer is buying in a market where prices are up, rates are up. So affordability is our biggest challenge. It has been the biggest challenge for the last couple of months. I can't tell you how many times I sit down with someone and they say, "Hey, Frank, this is so exciting. We're so happy to be in the market to buy. We're recently married. We're thinking of starting a family." And it's the same story. It's almost like it's scripted. And they tell me, "Well, here's how much we have for the down payment, and we want our monthly payment to be at $3,500 a month." I said, "Okay, great." We run the numbers, and I hand them a pre-approval letter, let's say for $450, and they're looking at it going, "Are you sure this is accurate?" And I said, "Yes." They're looking at houses for 6 and 7 with their agent, and to keep it at that payment, they've got to be at, let's say, $450 or $500,000. So they're at that. Well, it's a big number, right? Yeah. If you go back to early 2022, when rates were in the high 3s, low 4s, to be at a payment of $3,500, you could probably go up to like $550,000 with, let's say, a 10% down payment, and maybe even less. But that same $3,500 now, instead of $550, is probably closer to $400,000, depending on the taxes, the insurance, and the association. So there's been a huge. You got to remember, rates have doubled in the
Yeah,
last 18
2
months.
point something at one point, you know.
We had buyers we locked in on 20-year fixed rates under 2%, 1.875, 1.75
Wow.
on 15. So when you start seeing those numbers and you're looking at houses over here for 600 or 700,000, thinking, okay, great, this is where we want to live. And then you really see what the payment looks like, where that 700,000, it might be 6,000 a month. You're like, okay, it's unaffordable for me. So what I'm getting at is you definitely want to talk to different lenders. I would encourage people, shop around, get comfortable with, number one, understanding the process. Make sure the person you're speaking with is going to hold your hand through the entire process, especially if you're a first-time buyer. And then number two, don't be afraid to compare other lenders. You can pull credit within a 30-day window as many times as you need to, right? Now, I'm not encouraging you to go out there and pull your credit 75 times, but if you speak to a lender and you don't feel comfortable, you don't feel like they're really putting in the time and effort and really having you explaining to you and you're understanding the whole process, well, then, you know what, shop around. See if there's somebody out there that maybe that works better with you.
Yeah, there's, the one county that is in our MLS area, which we cover 4 counties. We're Broward County, Palm Beach County, St. Lucie County, and Martin County. And out of those, only one county was showing a price drop in the month of June, which was St. Lucie County.
How much of a drop, if you don't mind me asking?
I'm sorry?
How much of a drop, if you don't mind me asking?
It was minuscule. It was a single digit. I can't remember the exact average price in St. Lucie for a single family home is $398,000 versus $625,000 in Palm Beach County.
Is it that much of a difference?
It is that much difference. So my daughter, we went to Port St. Lucie in February of this year to get her and her husband their first home. And we paid $310,000 for a 3-bedroom, 2-bath, single-family home, completely remodeled on a 1/4-acre lot with a fenced-in yard. It needed a new roof. We got a $16,000 seller credit back for that roof.
Good for
and
you.
the following week, they got the new roof on, and it dropped their insurance down. Their insurance is $2,200 a year. So pretty significant, right?
Yeah. Yes.
So if you are a first-time buyer and you live in Palm Beach County, you may want to migrate just a little bit.
Well, I'm going to be honest with you. My transaction coordinator lived in Boca for quite a while, and he was having a difficult time finding something. And he did exactly what he's in Traditions.
Okay. Yes.
Bought a really nice house in Traditions for like $525. 4-3 with a pool, fairly new, loves the area, bought a golf cart. His kids, they love living up there. And look, it takes a little bit of a transition. They're going to a different school. You've got to meet new friends and the whole thing. But if you can make it work, look at the price point. Look at the difference. $622, $398. You're talking a $225,000 difference in price. Just to put that into perspective, that's about $2,000 a month difference in payments.
Oh my God.
Big number. It's a big number.
It's huge. It is huge. I was trying to think of, I did notice also in the zip code 33412, which is Palm Beach Gardens, that the average price did go down. And I was surprised at that. I have listings at Ibis, so that's why I'm always in tune with it. But, right across the street from Ibis is all of that new construction, Avenir, whatnot. All the homes are highly priced, but yet it drops. So I'm very interested in seeing this month's numbers and how we came out of July. It's going to be very.
I think as the year goes on, I think there will be a little bit of a price drop, only because, at least in my experience, I noticed that towards the end of the year, there's not as much buying frenzy because, November, December, I feel like people kind of take their foot off the pedal. School's kind of winding down. People get ready for the holidays and stuff like that. And do you really want to be selling and buying a house 2 weeks before the holidays or the end of the year and the kids are on break. So I still think there's always going to be a great time to buy a house, right?
Oh, yeah.
In that scenario where people are taking their foot off the pedal, maybe not looking as much and saying, I'll wait until the beginning of the year, that might be the time to buy, because now you're not competing with so many people. And I always tell my buyers, I can certainly respect the fact that somebody wants to wait for prices to drop. But if prices drop $75,000 tomorrow, well, how many people do you think would re-enter the market? So now you're competing. Right now, you might be competing with 3 or 4 people. But if there's a price drop of $75,000 or $100,000, that 3 or 4 goes up to probably 10 or 12, because now those people are like, you know what, I'm going to go back into the market because I saw there was a drop in prices, or rates went down. So now I'm going to tiptoe back into the market to see if I can find something.
You know, I know it's a simple number, but I've really never, I guess, thought about that it is times 2 the mortgage payment now than it was 18 months ago.
Oh yeah, absolutely.
See,
it might even be times 2.5 when you factor in the insurance.
Right.
Think about it. So my thing is this: we've got and this program to me it's a game changer, and I'll explain it to you, and I'll explain how it's going to help people who may not necessarily be able to afford the payment today, but in the future they may be in a different position. So I want your audience to remember this program. It's called a 3-2-1 buy down. There's a 3-2-1 and a 2-1 buy down. 3-2-1. It's great. You're gonna love it. So year 1, let's say, for example, today's interest rate is an even 7%. I'm being generous, by the way, but let's say it's 7%. On a 3-2-1, year 1, you're at 6%. I'm sorry, year 1, you're at 4%. So it's 3% less. Year 2, you're at 5%. And year 3, you're at 6%. So that's where the 3-2-1 comes into play. Year 1, 3% less. Year 2, 2% less. Year 3, 1% less. So I'll tell you where this program works great. I had a woman call me about a year ago. She said, I'm getting divorced. It'll be finalized at the end of the month. I need to buy a house. I said, okay. So my house is under contract. I'm closing in 3 weeks, and I need to find a house ASAP. So we ran some numbers, and payment just wasn't working for her. It was too high. So we had discussed the 3-2-1 buy down with her. And she said, this is perfect for me. She said, because year 1, now this was at the time, rates were in the 6s. I think it was like 6.625 or 6.5. So it's year 1, her rate was 3.5. Year 2, her rate was 4.5. Year 3 was 5.5. So she said to me, Frank, this is ideal for someone like me. She said, because even by the 4th year, even if the payment goes up $1,500 or $1,700, I've got my 2 kids in daycare. So they go to public school in the next 3 years. So now I'm paying $2,000 a month for daycare, but now in 3 years, my kids are going to be in public school. So even if my payment goes up $1,500, I'm still ahead because my kids are now, I'm not paying for daycare anymore, right? Another person it's perfect for. Let's say you have a position, a job, where you get a gradual raise every year, right? Palm Beach County Sheriff's Department, whatever, a teacher, positions that get a raise every year, right? Like let's say you have an interim position, and you're going to be getting a raise in the next 2 or 3 years. Well, this is perfect for you because you get the advantage of a lower payment the first 2 or 3 years, right? And then by year 4, when that payment goes back up, you'll be making more money at that point. And here's the cool part. The buyer is not even allowed to pay it. The seller has to pay it. So you can incorporate that cost into your offer price. So for example, Donna, let's say I said to you, hey, I want to make an offer on your listing, Donna. I see you have it listed at $450. You make an offer for, let's say, $425. And let's say you come back and you say, you know what, my seller's net bottom line is $430. Great. Let's write the contract at $440 or $445. Give my buyer back a credit for $10,000 or $15,000, and the buyer then turns around and does the buy down program to lower their payment for the first 3 years. So now you just put a transaction together that may not have worked because that buyer doesn't want to pay 7% right off the bat. Does that make sense?
Oh my goodness, yes. And does that 3-2-1 buy down program, does that apply to every product that you have?
I lost it one more time.
I said, does the 3-2-1 buy down apply to everyone that's getting any type of loan, or is this strictly to conventional FHA?
So it's conventional. So it's conventional financing.
Very nice. Well, why wouldn't everyone do that, right?
Well, the only reason you wouldn't do it for two reasons. Number one, if the seller would not agree to doing it, or you thought maybe the house wouldn't appraise. So it does have to appraise. So if we're under contract at 450 and we're getting a $15,000 credit from the seller, and let's say the property appraises 25,000 light, well, now we can't ask the seller for a credit for 15,000 if we're now 25,000 light on the appraisal. That would have to be, we'd have to adjust have to restructure the whole contract. And really, too, the only reason why they wouldn't do it is because they don't know about it. I can't tell you how many people I've spoken to, and they're like, I've never heard this before. How come no one's explained this to me? And I think the problem is they don't take the time to really understand the buyer's needs and the buyer's situation at the time.
Yeah, absolutely.
It's ideal for someone that doesn't make that's not making a lot of money right now, but their income is going to grow in the next 3 years.
Yeah. Plus, it lowers that interest rate, and
Of course.
that's big money.
Yes.
We have about 4 minutes left on this show, so I want to ask you a few questions. Okay.
Sure.
So you started in the mortgage business how many years ago?
2004, August to be exact.
And your parents sent you out to get a real job, if you will, right?
Yes.
That's
Yes.
what they wanted you to do. So when you came back and told them you were doing this job, how did they feel about that initially?
Well, I think they felt okay because at the time I was milking college I was milking it pretty hard, right? I was taking four classes. I mean, a class was an hour and a half long. You were going there probably 3 or 4 times a week. So you had plenty of time to do other things. They liked it. I've always been a numbers guy. So I feel like, and I like sales. I like working with people. So for me, it's not really just about the money aspect. It's about, I like helping people. I like conversing with them. I like having a better understanding of what I can do to solve a problem. And the number part of it, I used to love when I was really knee deep in a loan where I had to get really involved and figure out a way to make it work. So that part of it I always felt was a lot of fun. So I think that they were probably more or less just get out and do something.
They're like, yes, you did it.
You got a finance degree, go use it to do something, right? But yeah, that's how I got into it.
And are you a native Floridian?
I am, believe it or not, I am. I was born in Fort Lauderdale, Holy Cross.
Oh, how about that?
Yep.
And
yeah.
You did your high school where?
High school was in West Boca. High school was West Boca.
And then on to FAU to college?
On to FAU. I stayed local.
That's a great college. Love FAU.
Well, when I went there, again, 2004, it looked completely different. We had no football, no football stadium. The buildings were so old and run down, I can't even tell you. It was it was night and day what it looks like today. That I can promise you.
It's my favorite story, and this is kind of non-real estate about FAU is I was a retail store manager for 20 plus years. I spent 22 years with Walmart, and then I ran the Sears Boca Raton for 5 years. Town Center. I ran that at the Town Center for 5 years. And while I was working at that Sears, one of the guys that worked for me in the back, hanging clothes, name was Alfred Morrison. I believe that's right. And he was recruited by the Washington Redskins. He was a player.
Oh, the running back.
Yes.
Yes. Yeah. Of
I
course.
was
I know him.
there on the draft day, and he was a kid from, a family of 7 from Tallahassee.
Yeah.
And he'd been hanging clothes in that back room for 3 years, right?
Yeah.
And we worked around his football schedule and whatnot, but that really put FAU on the map for me,
FAU was great to me. I remember there was a little bar on campus we would go to after class. But it looks nothing like it did when I went there. I can tell you that. I drive through there sometimes because my daughter plays soccer and softball, and I'm like, I tell them, like, you have no idea how different this school looks today than it did 20 years ago. And I'm like, you don't even get it. It was just completely just night and day. And let me tell you something, just to add on that real quick. Another
Yes.
reason why you're seeing so many people migrating down here is because that school now, you've got FAU, you've got Lynn, you've got all these great schools. I mean, you have so much just access to everything here. So I don't think you're going to see prices dropping. I just don't. I feel like it's a market where if I can really just hammer home one thing, don't wait for prices to drop, especially in Palm Beach and Martin County and Stewart and all those, because they're not going to. Because the people that are living here that can't afford to live here, they're just going to go north.
Yes.
They're not going to leave the state. They're going to go an hour north, 45 minutes north, and they're going to go there. And we're still going to continue getting people from out of state.
Yes, because I mean, we are just a center for culture, whether it's the Marlins, the Panthers, the Dolphins, the Heat, concert venues. I mean, I don't know. I feel like we have everything down here,
We have it all. We do.
We
It's
do.
a little hot in the summer, but
And in a short distance from all of us. We're at the end of our time for today, Frank, and I want to thank you so much for coming on the show and sharing your knowledge about the mortgage industry with us. You can see across the bottom of the screen to our viewers Frank's information. We'd love it if you'd reach out to him. Please reach out to me too so we can make your real estate dreams come true. We're here every Monday at 3 o'clock on Real Estate Dreams and Beyond. My name is Donna Campbell, real estate professional for Caldwell Banker here in Palm Beach County. And today, my special guest, Frank Christiano with Premier Lending. We want to thank you again. Frank, thank you so much.
Thank you, Donna. Thank you so much. This was great. I really enjoyed it.
I did too, and we'll do it again.
All right. Got it. Have a great day. Thank you, everyone.
And have a great day. Bye.
You too.